Welcome and happy Feel Good Financial Friday, coming to you on this 11th day of November 2022. I'm your host, George Kroustalis, and with me, my co-host extraordinaire, Kim Lancial, financial literacy consultant, as well as Sam Castellan, real estate development expert, and our crypto expert. Crypto, Sam, that is the key word this week. And outside of yesterday's incredible market move, that's been the news all week. And I imagine it will continue being the news all weekend. We just learned less than an hour ago that FTX is now filed for Chapter 11. More on that shortly. What a week. We started off midterm elections. It was not, safe to say, the red wave that the media, newspapers, and everyone else had expected. Very different from that, as much as we know, because there are a lot of things still in flux and votes being counted. However, that coupled with the fact of the FTX news, coupled with the fact that we were heading into this CPI data on Thursday, sent stocks tumbling roughly 2% for the S&P, close to 3% for the NASDAQ on Wednesday. Well, for the first time in over a year, it feels like it's been over 10 years because we've been on these Friday mornings after the past 4 CPI data release when it comes in hotter than expected and the market's down anywhere from 700 points to over 1,000 points on one occurrence. But we had lighter than expected number that came in. That sent U.S. dollar lower, sharply lower actually. U.S. bond yields lower. The 10-year was teetering, 10-year yield teetering on 4.25 on Tuesday and Wednesday, only to retreat. I think we're still under 3.9 or thereabouts. We're under 4%. So that's a big move in a day. And of course, we saw the green on the screen, 1,200 points for the Dow yesterday. Best day for the NASDAQ and the S&P. It was over 7% for the NASDAQ. Really incredible. Best day for those two indices since the depths and the lows of the pandemic. That would take us back to March of 2020. So historic in many ways. So it is indeed a happier and a feel-good financial Friday for many of us. Kim is on the road again. Surprise, surprise. Her travels have taken her to Chicago, where she is reporting live, and she will give us a report and her weekly report now. And I think Kim has got something to do with saving and spending, I bet.
Exactly. Good morning from the cold and windy city and down by the Chicago River, enjoying myself here this time. So yeah, it's interesting. We are, as it's being cold and windy, we're going into the holiday season. And because of COVID, so many people haven't seen their families. They're really on the move. George, you've been traveling. Sam, you've been traveling. I've been traveling. It's all back to normal in the airports. So what are people doing? They are preparing for the holidays. What are they doing when they prepare for the holidays? They're spending more money. It's a significant more amount of money that people are spending on their holiday decorations, on gifts, etc. We know the reasons why things are going up. It's the supply chain issues continually. It's the droughts, etc. So I want to kind of remind people that as though we want to get into the holiday spirit, saving is more important now than ever. So what are we going to do about all this? The savings about just kind of tighten the budget as best as you possibly can. Another thing too that people are going to be spending their monies on, and they continue to do with maybe it's not necessarily such a good idea, is the student loans. So I want to remind our viewers out there today is that the student loan repayments are going to start in January. So what are you going to do? Here we are, the holidays. No one has been celebrating, in years past. And now these student loans, the payments are going to start in January. So, start thinking about the ways that you're going to be able to save and not spend. And, you're going to have to go through certain types of application processes. If you are going to be going back to the student loan repayments, get in touch with your borrowers, et cetera, and, see what you can work out. And hopefully you can kind of work out so it's not so difficult and so hard on your bottom dollar.
Great advice. And particularly, it is difficult to save more in this, what I call the spending season, holidays, there's travel involved, there's gifts involved for Christmas. It's tougher to do, but if you can just even stay afloat in Q4, historically, my best time to save or save more excess was always that first quarter, right? All the spinning's done, the travel's done, it's cold outside, you're working, you're doing things indoors, and you're not out much.
Right.
That was the lesson for me always. Sam, you've got a lot to talk about with crypto, almost too much. We may have to even spread this to next week, because there's still developing and very fluid stories that are breaking almost by the hour.
George, what a week. What a week. I mean, first of all, happy 11/11 to everyone. It's almost 11/11 as well. So there's a good opportunity for everyone to make a wish today. And so hopefully that wish is that the markets come better and that this new crypto crash comes to a good conclusion. But yeah, I mean, what a week. We had the election on Tuesday. The results were surprisingly more even than what many people thought, still with a majority on the Senate and the House, like still for grabs on both sides. So that really was surprising for many people and created some uncertainty in the markets as well. So we'll see what happens with that. And everything is playing out in this new end of the year, times. And what a week in the crypto market, George. Like we saw this amazing, incredible story for NFT,
FTX.
FTX. Thank you, George. So FTX, and what a story. We saw how, basically this company was one of the major players in the crypto space, right? Like right after Binance and Coinbase. And, to summarize the story, we saw that company having many financial problems. The CEO was at the same time the CFO. And, at the end, that didn't play out well, to the point that early this week, they needed to reach out Binance to see if they could rescue them. Basically, they needed like $4 billion to stay on top of the, on their financial assets, but they were so over leveraged that they, even Binance backed out from that deal right after 24 hours of having their due diligence, process. They needed to back down, and so that essentially put the CEO from FTX in a position that he lost 94% or so of his network in the next, within 24 hours. So it was like one amazing story. Also, they control several assets in different countries and in different parts of the country, including here in Miami, the NFT arena. So, incredible story to follow.
I wonder how long it will take the FTX arena, what used to be the American Airlines arena, to remove that name. This just in, that's why I'm looking at the TV. So sorry. So he's losing even more money. Sam Bankman-Fried just resigned as CEO after filing for bankruptcy. FTX token, which a lot of this money and client assets was held in, is down another 26% this morning. So again, developing story. Kudos to Binance, by the way, for, I think, like you said, 24, even less than 24-hour due diligence. Looked at it and said, this must be a dog with fleas. We're walking out. Kudos to them, but it did take this down. We'll see what the ramifications are. Typically, when a shoe drops like this, unfortunately, there are more shoes to follow. So my guess is that a week from now, we will be talking about more fallout from this. And hopefully this is not systematic and takes down many other, let's call it, lack of a went down, it was a domino effect. We don't think this is that sort of situation at this time, but again, developing, we're in it. So happy 11/11. Thanks for reminding us, Sam. Hope everyone has a fabulous weekend as we get now to mid-November. Keep in mind, please remember to subscribe, share, and like. That is how we get the good word out. And look forward to bringing you more exciting news. It will not be a roller coaster like this as always, but it's been a very exciting week in the world of finance. Thank you for joining us. Adios.